Hey there traders, thanks for joining me for this video. It's nice to be back for a weekend review of the indices. We'll take a look at where we stand and what are some key levels as we move forward. I do want to wish those of you out there who are fathers a happy Father's Day. I've been a dad now for about 5.5 years, got 2 little boys, and I realize with each passing day what a challenge it is and yet just how fulfilling it is. So I really respect those of you who have been at it for decades. Now, turning our attention here to the market, last week we saw a pretty light volume week, not a whole lot of activity in terms of participation, but we did see some continuation of this bounce off the prior Thursday and Friday, and that came into Monday's high. Now then we pulled back here into midweek, Wednesday, Thursday, before a return back up, and then a little bit more downside on Friday. So a lot of back and forth last week, but I think that the big key right now remains first and foremost, this big trading range that we've got intact. That's with these 2 white lateral trend lines. And then secondary importance is right here, this lower high scenario. And for the Nasdaq, that's at the 3484 level. You know, we came screaming back away from support on Thursday and looked like maybe we were going to come back up and challenge or possibly even exceed that with some follow through. But then Friday, we saw the market continue to drift its way back down. So right now, the 2 big levels are this big support zone right down here. That's at the 3370 area, and that's the unfilled gap from early May, extends down to 3340. So if we get through 3370, we can most likely expect to see a fill of that gap to 3340. On the way back up, however, we've got this 3484, and then we've got this high up here at 3532. That's likely to pose us some significant resistance. However, we're still some 109 points from there as of tonight. So, it's just a range-bound market. You can see just how very limited the follow-through has been. I think that's very critical to understand right now when it comes to trading strategies. And the way that I've been combating that is to stay very selective with multi-day trades and to primarily just abbreviate my holding periods for new positions that I find. So let's move on. Here's the S&P 500. We've got this primary uptrend line. It goes all the way back to November of last year. And it coincides with this lateral level right here, which was some resistance in April before we finally broke out in May and ran higher. Now that peak right up here, that's the 1687 level. And this level right down here is this 1597. So we're in basically a 90-point range here for the S&P. We are again struggling to lift from support here. We saw a weak finish last week with some Friday downside, and on a net basis, each of the indices gave back a little bit of ground. It was not real significant. So the trading ranges are still intact, but this 1597 area, that's the big number. We've seen some recent tests of that. In fact, on Thursday last week, we got to 1608. The prior Thursday, we got to 1598. So we've twice come down in that area. We haven't yet broken down. We do have this short-term lower high in place for the S&P. That's around 1648. So we'll continue to keep that level on the radar as well. For the Russell 2000, this index peaked at 1008. In fact, let me just zoom in a little bit more. 1008 was right up here. And then we've had this 970 area that's been repeatedly serving as some support. In fact, last week we got just a fraction of a point beneath that on Thursday. Wednesday we stopped about 1.5 points above that. And we have seen a couple of breaches beneath that level, but we haven't yet held one yet. And so I think that that's important. So we've got 1008 up here, we've got 970 right here, and then this 992 area, that's kind of some multi-day resistance. That's where this bounce high from the previous week took us to into Monday's high of last week. So 992, 970. Now if we get through this 970, then the next big level is likely to be this 954, and that's right here where we broke out in May. And then there's the Dow, which is the senior index, but it's only 30 stocks, and therefore it's the lowest on my list in terms of importance. But 14,887, that's what this index broke out through right here on May the 3rd. It peaked up here at 15,542. So that kind of gives us the boundaries here for the trading range. And for the Dow, it's at the lower portion of the trading range, but it's not quite knocking on the door of support yet. But again, a push back below 14,887, and we've got room for the Dow to correct further. Now, the Monday peak last week was kind of the short-term bounce high. That's at 15,300. So we've got kind of a short-term range right here. We've got this intermediate term range right up here. And then finally, I wanted to just point out the VIX. This is the volatility index, and it's just kind of the fear gauge, and it just points to obviously heavier or lighter volatility. And we've seen volatility really pick up in recent weeks. We've been down near historical lows way down here at this 11, 12 area for so long, and we went out last week at 17.14. Now we haven't yet seen a close above 19, and even going back into late last year, this 20 area was pretty significant as well. So I think that keep a close eye on the 19 area for the VIX. If we get through there, we could certainly see volatility spike, and we would most likely see stocks start to correct a little bit harsher alongside that. So thanks again for joining me for this video. If you're looking for some trade ideas to add to your own, we'd love to have the opportunity to trade with you through our premium service at thestockbandit.com. Stop by if you've never used it. We do offer a free trial. But other than that, enjoy your Father's Day weekend. Relax. Get some downtime this weekend. Gear up for next week because it's likely to be an important one. Thanks again for joining me. I will see you soon with more. But until then, trade like a bandit.